going to actually do something here. Since I'm going to do a match, I'm going to add this /year thingy over there. There's an Excel function called concatenate. It basically glues together multiple things. So I'm going to take that 10 and I'm going to add this text. So I want to do something that handles both makers or straight line, okay? I'm going to do this over until 21 years because that's the last of the makers. So I'm going to figure out the depreciation percent. First and foremost, I'm going to ask if this thing is equal to yes. If it's equal to yes, I'm going to do a lookup from the makers table, okay? So I'm going to say, oh, if this thing is greater than tax life plus 1, 0, okay? Because if it's a 10 years, all depreciation is going to be done in 11 years. Otherwise, I'm going to do what we call an H lookup. H is short for horizontal. So I'm going to look for this where in this table oh, I'm sorry. In this table, and what I'm going to look is actually this thing. The first argument is what I'm looking for. The second argument is table. The lookup is done in the first row. And once you find a match, what are you gonna, which column, which row are you gonna return? Well, I'm gonna return this row plus 1. So that, and false. That means I'm looking for exact match that closes that if. Okay. And if this argument is not a yes, I'm doing a straight line, which means I'm going to do 1 over the tax life. Obviously, the first year is exactly the same. So let's grab these. Let's make sure starting year 12, it's 0. And I'm gonna convert all of these into percentages. For example, if it's 5 years, and let's check the 5-year table. 32, 19, 2, 11, 5, 11, 5, 5, 8. If it's 3 years, if it's 20 years, all of that. All right. Or if it's a no, that means I made a mistake somewhere. Yeah, I didn't make that a fixed number, fixed reference. Okay. If it's a 5-year straight line, oh, I didn't do a test over there. If this number is greater than the tax life, 0, otherwise that whole thing. Let me see. Okay, now. I mean, I know it's a long thing, but I wanted to do it in just one line. So if it's 3 years, and capitalization of that input doesn't matter. So this actually gets us the depreciation percent. Once I know the depreciation percent for each year, the actual depreciation amount, take the depreciation percent for that year, multiplied with cost of acquisition. So book value, the first year, it's cost of acquisition minus first year depreciation. After that, last year's book value minus this year's depreciation. So if it's 10-year makers, that's how the book value goes down to 0. In this case, in 11 years. Let's do salvage years. Let's say 7. I want to know what the book value is at the time of salvage, which means, in this case, I can manually see it and write it, but we know that that's a very pedestrian way of doing things. If you know me at all, I don't like doing things pedestrian way. I'm going to do a V lookup, V for vertical. I'm going to look for that value in this table. Once I find a match, I want the 4th column, and I want an exact match. Let's add salvage value. Let's say I'm going to sell that at 2.5. I also need tax rate. Let's calculate salvage profit. What you sold it at minus what was the book value at the time you sold. And I don't have to do it in separate stages, but it's kind of instructive. Take the salvage profit, multiply it with the tax rate. And finally, after tax salvage, take the salvage value minus any salvage taxes. As you know, I'm going to do that right. Now we have a nice little setup that's going to help us calculate salvage value. Let me save this as but when we're actually doing pro forma income statements, I can also use this table to get the depreciation amounts given the acquisition value and use that to calculate net income for each year. And right now, we just set up the salvage value, but we've done most of the work. So if I bought a $25 million stuff, sold it at 10 at the end of year 5, straight line depreciation, or it had a 20-year life, and makers. And tax rate maybe 22%. Remember, negative taxes means you get tax credit, or firm's existing tax bill is reduced. Okay. Have this available next time we meet because we're gonna use that. I'll post it after the lecture.